We are covering the 7 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on X. United States Steel Corporation, a major player in steel production, made waves recently as it entered active talks with Nippon Steel about a potential $14 billion deal. The buzz surrounding the deal started strong, with U.S. Steel's stock jumping over 9% in after-hours trading yesterday following a public relations announcement. However, that initial excitement faded as the day wore on, and the stock ended up only slightly up, gaining just 0.05% today. The talks are focused on a revised deal where Nippon Steel is reportedly willing to invest billions more into upgrading U.S. Steel's plants in the Rust Belt. This is a move to help push the merger forward after it was initially blocked by the Biden administration due to national security concerns. The new plan involves Nippon taking a minority stake rather than a full buyout and starting significant capital investments into U.S. Steel's aging facilities. Despite the positive news about the deal and the investment boost, there are still plenty of hurdles. Legal and political challenges remain, with opposition from unions and activist investors, and the merger still has to clear government scrutiny. While the stock's late-day dip suggests investors are cautious, the potential for long-term growth remains intriguing. If Nippon's investments can help modernize U.S. Steel's operations and secure regulatory approval, this deal could reshape the company's future. But for now, it's a wait-and-see situation, with stock performance staying flat after the initial surge. Our review on PPL Corporation, the energy company that delivers electricity and natural gas across several U.S. states, saw its stock rise by 2.09% today, a solid jump for the day. This uptick comes as investors seem to be reacting positively to recent developments, though it's not entirely clear what specifically drove the price increase. The company operates through 3 main segments: Kentucky, Pennsylvania, and Rhode Island, focusing on regulated electricity and natural gas services. PPL's operations span from transmission to distribution, with major players like Louisville Gas and Electric and Kentucky Utilities in Kentucky, PPL Electric in Pennsylvania, and RI in Rhode Island. It's been making moves in the regulated space, which is typically a stable area for energy companies, given the steady demand for electricity and gas. The rise in stock could reflect optimism around regulatory updates or even broader market trends that are favoring utility stocks like PPL, which are often seen as safe investments in uncertain times. Whatever the reason, the 2.09% gain today is a positive sign for the company's outlook in the near term. Investors seem to be feeling more confident, and it's something to keep an eye on, especially as energy companies continue to navigate regulatory changes and market conditions. Our review on PRMB, Primo Brands Corporation, the beverage company that's all about healthy hydration, saw its stock rise 2.47% today. The company, which has a solid portfolio of water and enhanced beverage brands like Poland Spring, Pure Life, and Mountain Valley, is seeing a lot of attention from investors due to its strong performance and future growth potential. Now, what's been fueling this boost? Primo's price-to-sales (PS) ratio is currently sitting at 2.5x, which, at first glance, might seem a bit high, especially when compared to the industry average. A lot of companies in the U.S. beverage sector have PS ratios below 1.7x. However, when you dive deeper, it's clear that Primo's impressive revenue growth is what's driving this elevated ratio. The company managed to grow its revenue by a solid 9.7% last year and has seen an overall 54% revenue increase over the past 3 years. Those kinds of numbers are hard to ignore. Looking ahead, analysts are expecting Primo's revenue to grow by about 15% annually over the next 3 years, well above the industry's forecast of just 4.5%. This growth outlook is likely why investors are comfortable with the higher PS ratio, as they believe the strong performance will continue. So, While the PS ratio is an important metric to consider, it's clear that Primo's impressive revenue trajectory and future growth potential are what have investors feeling confident. For now, the stock's outlook seems strong, and with the 2.47% gain today, it shows that the market is buying into that future growth story. But, as always, there's one warning sign to keep an eye on. Investors should stay tuned for updates on how the company addresses any potential risks. Our review on TMC. TMC, the Metals Company Incorporated, is diving deep into the future of mining by targeting polymetallic nodules from the ocean floor, which are rich in metals like nickel, copper, and cobalt, key components for electric vehicle batteries and renewable energy storage. The company recently reported an $81.9 million loss for 2024, but despite this, its stock saw a 1.18% uptick today, reflecting investor optimism. This increase comes as TMC aggressively pursues the fastest path to commercial production, focusing on securing U.S. regulatory approval. This shift to the U.S. framework could provide a quicker route to market, as TMC has been facing significant delays from the International Seabed Authority, which has stalled regulations for over a decade. While the company has made impressive strides in reducing costs and scaling up its industrial processing capabilities, they're also seeing positive results from environmental studies showing potential for seafloor ecosystem recovery. That said, geopolitical challenges are looming, particularly following the end of a partnership with Kiribati, which has made room for China to increase its presence in the region. There's still uncertainty surrounding the consultation process with NOAA and the final regulatory decisions. But with a solid liquidity position of $62 million, TMC is prepared to weather these challenges. If the company can navigate these obstacles and gain the regulatory clarity it's seeking, it could open the door to significant growth in the near future, potentially driving the stock higher. Our review on SBSW. Sibanye Stillwater Limited, a global mining and metals powerhouse, has been benefiting from the recent surge in gold prices, which have been driven up by rising global trade tensions. The company, known for its diverse operations across 5 continents, with significant platinum, gold, and copper holdings, has seen its stock rise by 1.6%. This uptick comes as gold prices soared, with spot gold touching a record $3,086 an ounce. Investors have been flocking to gold as a safe haven amidst the uncertainty triggered by new U.S. tariffs and fears of an intensifying trade war. This has boosted the stock prices of many gold miners, including Sibanye, which has managed to hold strong amidst these changes. Today, Sibanye's shares are up 0.69%. Given the company's mix of precious metal assets and its focus on growth through strategic projects, there's a lot of investor interest in how Sibanye navigates these macroeconomic pressures and if the gold rally can continue. It's a time to keep an eye on how the company's diversified portfolio will perform, especially with the gold market looking as bullish as it has in a while. Our review on HLN. Haleon plc, a major player in the consumer healthcare market, saw its stock rise by 1.19% today, and it's easy to see why. The company, which brings a diverse range of health-focused products to the table, is benefiting from the ongoing demand for everyday wellness solutions. Haleon's portfolio spans across several key categories, including oral health, pain relief, respiratory care, and vitamins and supplements. Its big-name brands like Sensodyne and Polydent in oral care, Voltaren and Panadol for pain relief, and Centrum and Emergen-C for vitamins and minerals give it a solid foundation in both well-established and growing markets. One of the standout categories for Haleon is its respiratory health line, with products like Otrivin, Theraflu, and Flonase, which continue to see demand, especially during the cold and flu seasons. The company also has a strong presence in digestive health with brands like Tums, Eno, and Fenistil, which further diversifies its portfolio and ensures it can tap into various consumer needs. What's really notable here is that Haleon operates across multiple geographic regions, from North America to Asia Pacific, making it a truly global player. This gives the company an edge when it comes to reaching different markets, with localized products that speak to the unique health needs of various populations. With so many people prioritizing their health these days, whether it's maintaining oral hygiene, managing pain, or bolstering immunity, Haleon is in the right place at the right time. Today's stock performance reflects a broader confidence in Haleon's ability to keep delivering strong results, thanks to its well-known brands and its strategic positioning in consumer healthcare. Given the steady demand for its products and the ongoing consumer trend toward health and wellness, Haleon's outlook remains solid, and investors seem to recognize that stability. Our review on SOBO. South Bow Corp is a relatively new player in the midstream energy space, focusing on connecting Canadian crude oil production to the U.S. Midwest and Gulf Coast markets through an extensive pipeline network of around 4,900 kilometers. The company's infrastructure includes the Grand Rapids and White Spruce pipeline systems, which are key to transporting oil from Alberta's oil sands to important refining terminals, helping meet the growing demand for crude in the U.S. Today, South Bow's stock rose 0.61%, following JP Morgan's initiation of coverage with a neutral rating and a $28 price target. While the Keystone Pipeline is the company's main asset, it also brings a bit more risk by tying so much of its future to a single infrastructure. JP Morgan's analysis pointed out that ongoing tariff disputes could impact crude flows and pricing dynamics in the short term, introducing some uncertainty. That said, despite these potential challenges, the market still seems to view South Bow's position in the midstream sector as solid, especially with its crucial role in connecting Canadian oil to high-demand U.S. refineries and export markets. The $28 target reflects some confidence, but investors will need to keep an eye on these external factors affecting the pipeline's performance. Please subscribe, give the video a like, and watch more from our playlist. Thanks!